I'm here again. My full names are Luando Franklin, Chief Executive Officer and Lead Tutor at FCO Accountants Tuition Center. This time around, we are going to look at economic value added to an organization. This topic is relevant to advanced performance measurement. This topic gives students a number of problems for lack of understanding the concepts. So I'm going to explain a number of things. First, I will explain what it means when we talk about EVA, which is economic value added, how it is calculated. First, we need to look at the weighted average cost of capital, which will be used to calculate the economic charge, not the normal interest. And then I'll also explain how the economic capital employed is calculated for the purpose of calculating the economic charge. I'll also explain how the NOPAT is calculated. That is the net operating profit after tax. That is the one which is closest to cash. So now, here we go. We look at EVA. EVA is simply economic value added during the accounting period. So now, if EVA is positive, it means that management have added value to the business, simply meaning the value of the shareholders has increased, and that's what the shareholders, or rather investors, are looking for. If EVA is negative, it means value has been destroyed by management, meaning the value of the shareholders, or rather the wealth of the shareholders, has reduced, and the shareholders will not be happy with management. Is that okay? So now, first things, the steps that you need to take should be, first, you calculate the work. The work is the interest that we are going to use to calculate the economic charge. So the economic charge must be covered by NOPAT. If management fails to cover the economic charge, then they have not performed well. So work is calculated as the cost of equity multiplied by the proportion of equity in capital structure, plus KD, which is cost of debt, 1 minus T, that is the tax component, expressed as a decimal point, multiplied by the proportion of debt in the capital structure. So if we check here, we can go to item number 3. Interest charge for the year was 15 million on a variable rate loan with an interest of 10%. BASI is, which means this is the cost of debt. Diesel is funded by 60% the debt and 40% equity, that is capital structure. The cost of equity is 12%, and bills pays tax at the rate of 20%. So here we can calculate the work. So we are told the cost of capital here is 12%, which is clearly indicated here. The proportion is 60% debt, 40% equity. So multiply by 0.4 plus cost of debt is 10%, which will be 1 minus 0.2. Tax component is 20. Multiply by 60%. So here we have, how much do we have? 4.8 plus there also 4.8. So the work is 9.6. That will be used to calculate the economic charge. Number two, we need to calculate the economic capital employed. Economic capital employed. Okay. Now I want you to understand properly. So economic capital employed starts with the accounting capital employed at the beginning of the year. Starts with the accounting capital employed at the beginning of the year. And it is adjusted with the non-cash moving items. Now, the capital employed is the accounting capital employed, which is equal to net assets, and the accounting depreciation is removed, or rather deducted. But for economic purposes, we need to deduct the economic depreciation. So at the beginning of the year, if economic depreciation is equal to accounting depreciation, then you are not going to adjust the capital at the start of the period. If the accounting depreciation is more than the economic depreciation, because when calculating the economic capital employed, you add back the depreciation and deduct the economic depreciation at the beginning of the period. So if the accounting depreciation is more than economic depreciation, the difference will be added back. Now, if economic depreciation is more than accounting depreciation at the start of the year, then economic depreciation should be deducted. Are we together? If we have opening provision for depreciation, it means it reduced the opening, it means it was closing. So, which meant it reduced the accounting capital employed, and it must be added back. So here we can check what was the accounting capital employed, not two. Capital employed at the start of the year was 250. So there we have capital employed at start, which is accounting. Capital employed at start of year 250. So now adjustment, what could be the adjustments here? We can look at if we have any adjustments. If we have any adjustments, we can have, there we have So we check depreciation charge for non-current assets for the year. That is not at the beginning. The economic depreciation of which was, no, that was during the year. Now the last part there, the accumulated economic depreciation of non-current assets exceeded its accounting depreciation by 16. So what does that mean? It means we deduct, because we normally deduct the economic depreciation. So if it exceeded, we should be able to deduct less economic depreciation at the beginning. So the economic depreciation here is 16. Then we go again. Item number 5, brought forward at start of the year was a provision of 4.8, which was made in respect of debt owed. So when you made a provision, so this is opening, it was the closing, it reduced the capital at start, which is the accounting capital employed. So this now must be added back. Provision at start. Provision for bad debts. So that is 4.8. And then we can also look at anything that we can look at. I think that's all. We have 250. Is that okay now? We have 250 plus 16 less 4.8. 4.8. We have, so there, am I adding properly? 250 plus 4.8 less 16. So we have, again here, we have, that's 250 less 16 plus 4.8. We have 438, yes, 438. 238.8. So this is economic capital employed. So now we can go to NOPAT. NOPAT, you have those figures, so we can go to NOPAT. NOPAT, net operating profit after tax. So here we are given, as per question, net profit. The net profit there is 10. We can add back accounting depreciation. We are told the accounting depreciation is how much? 6. Accounting depreciation for the year, we have, it is stated there. We have accounting depreciation for the year is 6, which is here. We add back, and then we remove the economic depreciation. So here, accounting depreciation is added back, which is 6. Then less economic depreciation. The economic depreciation there, we are told it's 14. So here we have 8. Then now I want you to understand interest is already represented by the work. So it must be added back as net of tax. So net interest, net of tax, net of tax interest. The interest here is 15. So which will be 15 less tax. We remain with 0.8 because tax is 20. So there we add 12. And then we have the decrease in provision for bad debts. It was added, but that's not cash, you remove it. If you check here, item number 5 brought forward at the start of the year was a provision of 4.8, which was made in respect of a debt owed by a customer, which has since repaid. So that was a reduction. So reduction in provision for bad debts during the year, it was treated as a gain, but there is no cash, it must be removed. The increase in provision for bad debt, that's an expense. It reduced the profit, but there is no cash flow. So you must add back. So this one is a decrease, it must be removed. Less decrease. Decrease in bad debts. 4.8. And then now we go to any other item. Item 6. Within the current year, within the current profit or loss account, there is an expense of 0.6 million for the advertising in trade magazines. This led to several inquiries from new customers involved in large infrastructure projects, which has resulted in Bezu signing at least 2 large contracts. So now I want you to understand this must be treated as capital expenditure for the purpose of calculation of EVA, because it resulted in large increase in demand for the products. So it must be added back since it was deducted. So advertising, add back. Advertising expense. So this should be 0.6. So the total there should be 9.8. 9.8 should be the no part, which is closest to cash. So EVA is calculated as follows. So first you have no part. No part is 9.8, then economic charge. Economic charge is equal to economic capital employed, which we calculated to 38.8 multiplied by the work interest, which we also calculated. So we have there, it is giving us 23 point. So let's just confirm it. That is 238.8 multiplied by the 9.6%, which will be 22.92. So this will be EVA. So there was a decrease of EVA. So 13.12, this is decrease. So the government did not increase EVA. There was a decrease in EVA of 13.12. Therefore, the value of the shareholders was destroyed. And the management must work hard to increase the NOPAT in order to create value for the shareholders. So for today, we can end here, but remember to ask questions in the chat box. All the questions will be treated with the importance they deserve. If there are too many questions, due to lack of time, we may not attend to them, all of them, but we try our best to ensure we answer most of them. Again, please make comments in the comment section about the quality of this video, whether it is helpful or not. Again, on behalf of FCO Accountants Tuition Center, I want to thank you all for the support that we are receiving from you. May God bless you beyond measure. Thank you.